All right. Wow. I'm breaking everything here. What a good start. Hello, everyone, and welcome to the 5ers live stream. I just spilled water all over my desk. I hope your day is going better than mine, because luckily to me, I got some paper here, so I'll be doing some work here in the background.
Welcome, everyone. Welcome to another show of ours. We hope you will have a great time with us in the coming 2 hours. We will be checking charts, sharing knowledge, experience, everything we can to help you become a better trader. Let us know in the chat how your day is going, how the market is treating you, how that news, that move, that impulsive move on GU and EU, were you able to capture part of that or not? Were you able to recognize, when the market changed? Today I like it a lot, Jonathan, because it was kind of difficult to trade, I would say, because heading into the day, I had a reversal pattern, making me think that we could be pushing a little bit lower from current prices. But then the news came and everything switched right away. And you gotta be a nimble trader to be able to adapt to that, right? Be flexible, and that's something difficult at times. It's not easy because we tend to not marry the bias, but we tend to hold on to that bias a little bit too long, and that can hurt you. You gotta be and that's why having rules, how many times can you attempt a setup, it comes into play, will be helpful, because that will limit you from doing too much damage to your trading. What I refer to is that impulsive move. Were you able to get a signal, Jonathan, from that move up on GU or EU?
Yeah, no, I did actually take a pretty decent trade today here on AD CAD. So what I'm going to do is I'm going to switch that over right away, right here. You have, and by the way, welcome everyone. Welcome. Daniel with Louis, Henry, the dog, this guy right here, the dog face. We're going to call him dog face because I can't pronounce your name. And sorry, that's might be rude. That's not my intention at all. To be rude. I'm very appreciative of you guys, because you come in here and you're here almost every live stream, which is absolutely amazing. So really appreciate you guys coming in here. Your questions, your feedback is absolutely amazing, and it's really what creates these live streams. It's really because of you guys that the quality and the quality of this live stream is high, because of you guys, because of the people watching, because of the high quality questions that you ask. We have one question right here about the one.
You mean the user? Let me interject. You mean the user which has a dog as the profile, right?
Yes, exactly.
Yeah. Let me clear that up. We had another user, and you were mentioning dogface, but of course you're referring to this user who has an actual dog as the profile.
I'm not.
Okay.
I'm not referring to anyone with an actual face as the image. That would be absolutely terrible of me. So that is not what I'm saying. I'm talking about the actual dog in the image. Okay, so let's forget about that, and I want to show you this setup right here. And the this live stream today is called Simple and Effective Trading Strategy, and I want to show you guys two two types of trading styles that I think everyone should, at least try out. Everyone should understand, because I do believe that they're highly, highly powerful. Let me just adjust the lighting right here, because I do see that my face is quite not very bright. Okay, that's better. Okay, nice. So let me walk you through this. The two types of trading I want to show you guys is, the first one is just a, what we talk about lots in this live stream, and that's the break and retest. Just the break and retest of horizontal levels, and then I want to show you yes, that's right, the break and retest is the first one. Okay, so, and I want to, I'm going to be repeating some of the stuff I've already said, but I think it's really important, because a lot of people have been asking questions about this. And then secondly, I want to talk about something, a very simple way of trading a trend using EMAs. So I think I've taken two trades this week, actually, and they've both been winners. So I've had a rather good week here. The first one is a short on NCD CAD. Just I believe I shorted, if we use the replay tool right here, I shorted based on that bearish engulfing candle. I think this was the setup. So I think I got filled on that wick and then down there. So that was the first trade that I took this week. And then the second one is from this morning. And this is, probably, I would say, not a perfect setup, because I'll show you why it's not perfect, but it's definitely one of my strongest setups. And when testing this, these are the ones where if I take profit at half an hour, it has over 70% win rate. So these are my, bread and butter setups. These are the setups where I make most of my money. It's where, they're quite profitable. And I'll show you what it's all based on. Again, I've talked about this many times before. And before we continue, I want to show you something just quickly here. It's, if you go to the object tree and data window here in TradingView, so this is the object tree, you can create folders. You can create folders, and then you can put in drawings into these folders to categorize up your drawings and make your analysis more organized. And the way I use this is I have a folder called trades. And in here, you will see that I have all the trades that I've taken on AUD CAD and the accompanying tools to that. So we can, if I go to the daily and I click that one, that little eye right there, you'll see that all the setups will pop up, and you'll see all the setups and all the lines that goes with those setups will pop up. So what I'm going to do now is, because this trade is not complete, it has hit TP, and I'm done with that one. I'll move this down to that folder. I'm going to press the I, and now it's gone. And that one as well, because that's part of the setup. So now I have all my trades in this folder. So what do I do is every weekend I click this eye and I go through all the trades. This is a good way of organizing your trades and having all the trades in the same place when you're doing your weekly trade journal review. Okay, so let's break down this trade here. What we're seeing here on AUD CAD is a fairly strong trend. I think everyone that's watching this would say that this is a rather bullish trend. This is, price action is telling us that we're most likely going to continue to the upside. Yes, this is a rather bearish candle on the daily, but on the overall picture, you'd see that it's bullish. So that's the first thing we want to make sure that we're looking at. We want to make sure that the overall trend is clear. And then when we're going to be trading, we want to make sure that we're trading with the overall trend. So one example would be, if you go to this place, if you're watching this is a bearish market. Okay, this is a downtrend. You have lower lows, lower highs, you break the downtrend here, but then a continuation, and then you can see that the overall picture here is bearish, and then you start to form bullish structure here. And now I would say that the overall structure on the very high time frames, I would say it's neutral, but we're starting to break into a bullish pattern here. So the local structure is bullish, and then we break out, and looking at current prices, we are quite bullish. So when I'm doing my weekly trade planning, I'm looking at the daily, and I'm looking at the weekly, and I'm looking at high time frame levels where there might be a bounce. And the first thing I'm just looking at is going to be this area right here. We did have price move higher and then react to this level. So if price comes back down to this area, we could expect some type of reaction. Now, if I'm going to be honest, the best type of move would be all the way down here, because that's where we have more price structure, and that's a high time frame level. It's also going to be the reload zone of that high time frame move. So that's my initial idea. But I'm still looking at this level. I'm looking at this level and I'm saying, if there is a bullish reaction to this area and it aligns with the 4-hour, I might take a trade. So we now know that we have an area of interest right here. So let's go into the 4-hour. And what do we see here? First of all, we're going to make that daily level visible on the 4-hour as well. That's the 4-hour. Go to the 4-hour here. And this is the level where I like this level, right? And now I want to adjust this zone. So what if price starts coming lower here? And we can now see that price is starting to come down into this level. This is where I want to start adding the fibs to see where the reload zone is. So I'm using the very low here of the breakout move up to the high. And the reload zone is right here where we also have the breakout area. And now it's time to adjust this zone. I'm going to be using that high right there. And then I'm going to be using that high. So now we see that we have a pretty decent horizontal support and resistance area right here. That's the first and one of the most crucial parts of the way I'm trading. So what I'm showing you here is basically my whole trading system. This is the way I trade every day. And it goes from, scanning the markets on the weekend, looking at high time frame levels, and then adding alerts. So I'll have one alert here, okay? And that alert in TradingView is going to tell me, area of interest, okay? So that's the area of interest. The price comes lower right there. And now my alert goes off and it says AUD-CAD is now in an area of interest. Now, what do I want to see here in the reload zone on this horizontal support level? Well, I want to see a reaction, but what type of reaction do I want to see? So I want to see price slow down. I wanted to pause the down move, and I wanted to show me that it's using this level as support. And the best way for it to show me that it's using this level as support is to close maybe one or two 4-hour candles inside this area. And now it tells me that I'm trading in this area, I'm using it as support, and the final confirmation is a bullish reaction, a push to the upside. Price telling me that I'm ready to move higher. This is support. I'm ready to continue the high time frame trend. And the best way for me to find that confirmation is to see a bullish engulfing candle on the 4-hour closing above the 0.618. When I get a bullish engulfing candle closing above the 0.618, I put my buy orders slightly above the 0.618 because I want to front run the obvious level, and the 0.618 is the obvious level. My stop loss is going to be below the reload zone. And now for a take profit target, that's completely up to you. It depends on your level of patience, your testing, and your, basically your testing. But looking at this right here, I would say that that's a pretty decent level. Okay, it's a 1.5 R trade. Not the biggest move, but it's still 1.5 R. And if you look at that wick right there, I kind of like that level. You can add another level here, and you see that it kind of looks like that is the first trouble area. It does look like this is some sort of resistance. So you know what? I'm just going to pull it. I'm going to pull it down here. I'm going to take TP right before that level is hit. This is now a 1.19R trade with a win rate of around 70%. I think when taking 1R by testing, it has about 62%. So this should have like a 62% win rate. Now let's see how this plays out, okay? So now what we want to do is we want to see a reaction inside the level, okay? So we have now price action pausing. It's using this level as resistance, and as you can see, and we get a bullish candle. Very, very good. It's clearly being used as resistance. Now let's wait for that bullish engulfing candle, or just a strong bullish candle to close above the 0.618. Another one, awesome. And there you have it. That's the signal that's telling me it's now time to move higher. It's not a bullish engulfing candle. But this previous candle is almost like a pin bar. It shows us that there's a lot of buying pressure here. There's obviously more buying pressure than selling pressure. Look what happens. Look at what happened on the retest of the 0.618 right here. That's the retest. Next candle, retest, and then straight up towards TP. And this is where we are trading right now. If you can look at the daily, the 1 hour time frame, it kind of looks like we're now forming a 1 hour structure. I actually took TP a little bit earlier. So I took TP at around here, and my entry was a bit higher, but I got out of this for like a 0.6 trade. No music. Do you guys want music? Let us know in the comments if you. Alex says
put on some music. Is it audible?
I did actually take a poll last live stream, and it said that 60% didn't want to have music. But if you guys want music, we'll pull on the music. And Alex says music, so I guess we have to put some music on.
I put on.
Not too loud, though.
Oh, is it? Okay.
Let's do 8 lifelike. That's good. All right, let's go with that one. Okay. So first, I want to cover a couple of things. So we have Fernando saying that's for swing ride. You have to wait days for that. And then this guy says, yeah, I'm not a fan of these high time frame trades either. Guys, I'd like you trading C-Lot, and I'd like Fernando as well. Please let me know in the comments why you're not interested in high time frame trades, and why it's a problem waiting days for a setup to form. Because if you look at my trading this week, 2 trades, both winners, up about 1.5R, okay? And I feel like if I take, 1 more trade or 2 more trades and I get 1 winner and 1 loser, I have the possibility of being, up perhaps 2 or 3R on the week with basically minimal screen time. I'm spending 1 hour on the weekend, putting in the orders, putting in the levels. When I get an alert, I take the trade. Very few trades, but still profitable in terms of R. So I feel like it's obviously a personal thing, right? It's all about personal preferences and your personal trading style. But I feel like when I talk to traders, when I interview funded traders that we have, the traders that have been trading for a very long time, most of them trade the higher time frames. They're always, moving towards the higher time frames. And some of the more successful traders that I know is taking very few setups, and actually most of them say the fewer trades you take, the more profitable you're going to be. But I think that's something you have to keep in mind. If you are completely against swing trading because you feel like you have to wait for setups, then ask yourself, is it because you think it's going to be less profitable, or is it because you're not patient enough to wait for the right setups? Because that's a very important question to ask. Because if you feel like you're not patient enough, then become patient. Like, honestly, you got to work on that. Now, I'm not saying this because you should all be swing trading. It's the same when you're day trading. When you're swing trading, you might have 10 possible setups in a week. When you're day trading, you might have 10 possible trades in a day. but only one of them are good, you know? Probably one or two of them are going to be good A+ setup. So you have to be very selective. Okay, so we have some answers here. Let's see. Dean says, I prefer swing trading, suits my routine better. I am the same page as you on AD CAD, but my TP is higher. Yeah, so again, it suits your routine better. That's one thing, absolutely. And I feel like that's also one of the reasons why I'd prefer swing trading, because I have my daily, like I said, my daily routine kind of fits with that nicely. I'm too much of a stressor to have trades running for days. I need to be involved with it and hence watch it finish. Yeah, so let's talk about this for a minute. Now, of course, I don't know you. I don't know your what personality or your trading style or anything like that. But I feel like, if you're not supposed to be getting stressed. So obviously, if you're getting stressed from having trades open for days, then that's not the type of trading for you. But you should obviously find a way that's stress-free, stressless, and effortless. But if you get stressed from having trades open for certain weeks, maybe there's also aspect of your trading style that you're trading today that might, cause stress for you as well. So I feel like the solution to this could be just setting, like I do. I set alerts and then I don't watch the screens because I feel like a lot of that stress comes from having to pull up the chart all the time and kind of look at the trade. Like you have an open trading, you want to look at the P&L, you want to look at the trade, you want to make sure that you manage that one. So because I honestly feel like a lot of you watching this, like probably 90%, would be better off taking 90% less trades. Even if you're a scalper, even if you're a day trader or a swing trader, taking way less trades than you're taking today might actually help you become profitable. And, this is very, very important stuff. Fernando says, it's not that I don't like high time frames, but I see that you can take trades on the way down. And yes, okay. So that's a good, that's something that I've tested as well. And I've seen that. So what you're saying basically is, when you're trading an uptrend, you can short the highs and long the lows, basically. But the thing is, in an uptrend is, you can look at an uptrend and you can say, it's highly likely that this uptrend will print another higher low. But that higher low, depending on the volatility and the momentum of that trend, can be happening quite high up. So the risk to reward when shorting a downtrend is almost always going to be lower than going long at a low, a lower entry at the low of an uptrend. So let me give an example of that. This is actually a great example. That bearish engulfing candle right there, okay? You're looking at this and you're going to say, oh, well, this is where I want to go long, That's the area I want to go long. This is the trend. That's the break, and that's the retest. So if I'm going to go long here, why am I not just shorting this level? Let's just short this, okay? Well, I'm going to short that, and then I'm going to short it down to this level where I will take a long. Great, right? And then it just never comes down to that level and it continues higher. Because a lot of times when you have an uptrend and there's a lot of momentum in that trend, price will never retest the level. So it's better to actually wait for when price retests the level. It's not going to happen all the time. And it's one of the reasons why this strategy doesn't work perfectly on Bitcoin, because when Bitcoin breaks an important level, it trends for days and maybe weeks, and then it retests that level. So going short in a downtrend will always have much lower probability than going long in an uptrend. And that's why we always say the trend is your friend. You want to trade with the overall trend. And that's why actually waiting for the retest like we did here is going to give you a higher probability of getting the bounce, and also you're going to get more profits from that trade. So there's a certain things that when you're trading this system, for me, one of the most important thing is confirmation. And I'm going to show you an example where This is actually a trade. This is an example where I'd say if it's one thing that makes me profitable, it's this one right here. So yesterday, before going to bed around 10 in the evening, I looked at this and I'm like, well, you know what? This is interesting. Okay, this is quite interesting. We have we got news event, coming up here in a couple of hours, but maybe that's just going to be the catalyst that takes price higher. So you're looking at the overall trend here on daily, and you're like, how could you not take this trade? Okay, how could you not take this trade? Look at the uptrend here. Look at the trend. It's the absolutely most beautiful uptrend right here. Why am I not buying this? I should just get in on this right away. And you know what? I'm just going to take the gamble because the chances that price is going to bounce here is just so very high. And you enter, right? You enter the trade, and then next candles, boom, straight down. Now, I didn't enter this trade. I waited for confirmation. I put an alert above these highs and I wrote on the alert, free money. That's right, Henry, free money. I put an alert above these highs and I said, I'm going to wait for confirmation. I'm going to wait for confirmation. That waiting helped me save a lot of money on this move lower. Okay. So, confirmation and being patient and actually waiting for price to confirm that this is the level that I want to enter helps me. That's one of the key reasons for me to be profitable trading this system.
There's news coming out. It's medium news on Forex Factory, but on my FX, it is stated as a red folder news, which is building pyramids. So for the rules, for the 5ers rules, it's not a high impact news, but you still want to be aware of it. It is coming out in less than 2 minutes.
Yes, very good point. And then also we have a few more questions I'm going to go through here. Yes, exactly. That's what I'm saying, Fernando. You can wait for price to reach a reload zone and never get there. Yes, but it's not about getting in all the moves. It's not about taking all the trades. It's not about being in the market all the time. It's about waiting for the market to show you that your edge is visible. And my edge is waiting for price to hit the reload zone, and then after it hits the reload zone, it's confirming that that's support or resistance in a downtrend.
The whole idea of using tools like the reload zone, like the fib or order blocks in my case, is that we can filter out not all, but many of the losers. So that's why you want to wait it to come to your price or your tool or whatever you're using, because if you did your homework well, that means that you avoided losing by not waiting for your confirmation, right? So I mean, by waiting for your confirmation, by waiting for that confirmation, you avoid all those losses that you would have had, but you now don't have. And of course, that means that you will not be picking up every move. But that's the idea. The tools are a filtering device, if you will.
Okay, so a really good question here. So before I go through this question, there's one very important thing to mention here. And that's the fact that you should never compare yourself to anyone else. If you're making money, if you're profitable, that's huge. Okay. You're ahead of, less than 5% probably in this industry that tries to trade are profitable. So if you're consistently profitable, that's amazing. That's, congratulations to you. If you're making more money than I'm making, or if I'm making more money than you, that has that does not matter at all. The way you're trading is like you said, I have a big stop loss here. My risk to reward on the trade is much lower, but then because of a high win rate, I'll be able to pull in, between let's say on average, 1 to 2 or 3 R in a week. And if you compound that on monthly, that's actually quite a lot of money, because when you also have a high win rate, you have much lower drawdowns. So by testing this, my max drawdown is 3R, which means I can risk 1% per trade and only, in a big drawdown lose 3%. So what it's all about is what's your win rate, what your average are, and what your drawdown, and how much can you risk per trade. So if you take, if, like you say, you make the same amount of profits in a 5-minute trade instead of waiting 5 days, but what's your win rate on that? And what's your risk on that trade? Maybe I'm risking much more than you're risking on one trade. So my half an hour becomes much more because I'm able to risk more. But then again, you're trading the lower time frames, and I can't trade the lower time frames for several reasons, my life situation and my trading style. So it's all about finding the style that fits your personality. Some will be more profitable than others, and that's just the nature of trading. So it's very important here that when you see my system and then you see another system, you should not compare the two systems. You should ask yourself, which system works for me? Because you're not going to be able to trade a system that doesn't fit your type of personality. And yes, I with a stop loss like this, obviously the lot sizes needs to be much bigger than if I would have a much tighter stop loss. But again, that's what it comes down to, is your risk management. How much are you risking per trade? All right, another great question here. How do you train your mind not to get into a trade? This is the difference between being consistently profitable and consistently losing. Okay, the skill as a trader to not get into a trade will determine your profitability. And how I trade myself not to get into a trade is by reading this book, Trading in the Zone by Mark Douglas. That's all the advice I can give on that. That's the reason why I'm able to be patient, because I'm able to watch the market for what it is. Every price movement is just data. It's just data. It's just numbers moving up and down on your screen. There's no emotion attached to that. The only person that is responsible for attaching an emotions to market data is you. And when you realize that it's a choice not to interpret market data as something emotional, then you're able to just let go, and you're able to just wait for the right type of setup to appear. Will the dashboard on account show win rate in the future? I'm not sure. I mean, I guess so. I can't promise anything, but I know that the team is working in the background on updating the dashboard and adding lots of different statistics and everything. So what you're seeing right now on dashboard, from my understanding, is only the beginning, and I do suspect that something like win rate will be there. My camera is out of focus. It is. Oh, this is the power of the book. See if I can fix that. All right, I guess I'm not going to be focused. You know what? Let me fix that. Just a second.
Yeah, we let's see if I can answer a couple of questions. Well, a few of the questions are related to the strategy that Jonathan is explaining, so I will leave them to him. About the dashboard, yes, the dashboard, the current status or current state of the dashboard, it's not completely finalized yet. So we'll ask you to be a little bit more patient, to wait for the final result. We know that they are still working on it, so I'm sure they will have all kinds of things they still need to add to make them the optimal, right? So we'll have to wait exactly what metrics will be shown. We don't know yet. I personally don't know. I'm sure the team already knows, but the development teams.
Okay, this is a good question here. Can you show me more ways of confirmation before entering a trade? So let's take a look at NCD USD. Well, I'm not going to be able to show you, for a range because this is, well, I can. So let's look at NCD USD. Let's see if we could have found any entry triggers here using this way of trading. Obviously, sometimes we're just not going to get a trade, but I mean, if this would be the reload zone right here, and honestly, it doesn't have to be the reload zone at all times. I mean, this looks like a really good area for a buy as well. I mean, you look at that 4-hour candle right there. I mean, that's just perfect. So this could easily have been an entry trigger, just to close off that candle. That's a 4-hour bullish pin bar. So what I look for is bullish pin bars or engulfing candles within a support level. So now the perfect case scenario would be if this is also the reload zone, but that's a very good entry confirmation right there, the 4-hour pin bar. Now I would probably put my stop loss below these wicks and then take profit at these highs right there, because I view that as the first trouble area. So a 0.96 hour trade right here, a pretty decent trade in my opinion. So that pin bar is a very good confirmation of an entry. And then you can also see next time it hits this level, 4-hour bullish engulfing candle right here, same stop loss, the exact same TP. That would also be exactly the same R as well, 0.96 on that one. So bullish pin bars and bullish engulfing candles when going along is very, very very good. Now you can look at this one here, for example. You have a resistance area here, I would say, and then you have a bearish engulfing candle on the 4-hour right here, and here we can actually add the reload zone from the move that broke the level. So right here, and you see that it actually comes and hits the 0.618 right here. So even though this is a very low entry, it would still be a 0.67 R trade down to the FTA, which is this low right here. And the entry confirmation that I use for this one would be a 4-hour bearish engulfing candle. So I basically just look at pin bars and bearish engulfing candles. Here's a very nice looking bearish engulfing candle at a resistance area. And honestly, guys, keeping it very, very simple is a quite... You can be quite profitable with a very, very simple approach. Just look at support and resistance level. Whenever price hits resistance, look for a bearish pin bar or bearish engulfing candle or an outside bar, right? Or use the breakout structure. You can look at a breakout structure on the lower time frames. So let's assume that we're looking at this market. Okay, that's a break and retest. I mean, everyone would agree that that's a break and retest. Is it hitting the reload zone? Could even put it up here. And but I would actually want to have it there because it's the breakdown move. So when price hits this level, you want to look at the lower time frames, maybe the 1 hour, right? That's the first I want to look at. So if you have confirmation on the 1 hour, which in this case I would say, yeah, I'd say this is pretty decent confirmation, because it's taking out these lows right here. And I think that's also the 4-hour candle, but this could be interesting, right? Down to these lows, and that works as well. Now this structure right here, you can also go into the 15-minute and look for that break of structure. So now you have that uptrend, and obviously what you want to see is something like this to confirm that the trend is broken, and that's the breakdown. And then it comes back up and down. So here you have a good example of a breakup structure where you have that level right there. And now, of course, this move doesn't really move into that zone, but a good way of treating this would be to have an order here as well, and then trade it down here. So there's a lot of ways to look for confirmation of a trade setup like this. But most of the time, if you do get a good looking 4-hour bearish engulfing candle, this breakout structure will a lot of times be inside that 4-hour candle. So for me, I found that just waiting for the 4-hour candle to close instead of waiting for a breakout structure is going to be a much more relaxed way of trading, because you can see a trade setup form, and then you're looking at the candle and you're like, oh, it's 3 hours until confirmation. Well, you're going to work on that patient, and you're going to wait for those 3 hours for that trade setup to confirm, because most of the time it's going to be worth it. Just like looking at this trade right here, the one I showed you earlier, I waited for that candle to get above these highs right here. Never happened. And I'm very happy that I didn't enter this trade before I got that confirmation.
One of the ways to build on your patience is to measure why should you wait. And one of the ways to see the value in waiting is measure the results of both things. Measure a 50 trades where you did not wait, and measure the results of 50 trades where you did wait. And if your system has been constructed properly, the fact that you waited was because that it filtered out a lot of losers. And when you compare those two results, you will see that you're waiting for a reason. The reason is that you want to eliminate losers from your trading results. And when you assimilate that, when you accept that, you say, I want to wait because I don't want to have those losers that I would have had if I didn't wait, right? So I want to wait. I want to avoid those losers. It's good. There's value in there. When you realize that, it helps you combat that impatience. So there is a reason why you do it. It's not because it's just a rule that you may not be a person that likes to follow rules, but there's actually a reason where you can have more profits by following the rules, meaning waiting for that confirmation.
Yeah. Let's see, we have okay, so three we talked about trading in zone. So three things that I've learned from that book. I'd say, so one of the most important thing that I found is to be able to trade without emotions. You have to let go of any fear or any uncertainty that your edge is not working, which means that you need to have complete confidence in your edge, and you only get that through significant testing. Okay, you need to do a lot of testing and lots of trades, back testing, forward testing, live trading. You need to make sure that your edge is working. That's the first thing. If you want to be able to let go of emotions, you need to trust yourself and trust your edge. And then you need to be able to oh man, I had something I wanted to say. I kind of completely forgot about that. Yeah, so yeah, if you want to be trading effortlessly, right? You want to be just letting go and making sure that you're trusting that system, and you have to look at each individual trade as a completely unique and new opportunity to make money, right? So every new trade has a completely random outcome. So when you get a new signal, you have to look at that trade and say, this can either be a winner or a loser. It's a 50% chance, and it does not matter. The outcome of this trade does not matter, and I'm not emotionally attached to the next trade. Whether it's a winner or a loser, I don't care. The only thing I care about is trading the edge that is visible over hundreds of trades. After hundreds of trades, you can go back and say, is my edge visible? Did I trade my edge? Yes or no? So you got to look at each opportunity to make money, each trade setup as a completely new, unique, and random occurrence. If you think that every new trade has a 70% win rate, you'll be focusing on the wrong thing. The only thing you need to focus on is you need to view the market, and this is the third thing, right? Market information does not provide you with any negatives or positives. USD, your USD moving higher or lower is has nothing to do with positive or negative emotions or whatever. You're the person that adds an emotional meaning to price action. Price action is completely neutral. It does not care about you. It does not care about your trading plans or whatever. It doesn't really care if even if you're trading, right? So you're going to make sure that you're just looking at price action as completely neutral, and don't let emotions dictate your trading. Only wait for the edge, and when the edge appears, make sure that you're trading from a completely a place that's completely void of emotions. And if you can't disconnect yourself from your emotions when trading, you're not supposed to be trading. If you feel like you're watching a setup and you're not really sure what to do, you're feeling stressed, you're feeling a bit greedy, maybe fearful, do something else. Go out for a walk, go out for a run or whatever, and come back when you can be neutral. Okay, just follow the edge wherever and however it appears. You take the trade and let go of all emotions. That's very, very difficult, but you have to start at understanding. You have to start at a position of understanding that market data does not provide any type of negatives or positives. I think that's the three top things from that book. Um, let's see, what else do we have here?
We had a question about the news rule. It's not directly related, of course, to the subject at hand, but I've seen a couple of messages regarding that. The rule is you are not allowed to open a position 2 minutes before the high impact news until 2 minutes after the high impact news, right? It's about the opening. If you did open in between, right, then the rules applies to you. So your profits will not count, but your losses will count. If you open it at any other time, it's okay. So if your TP gets hit and you open it outside of that 4-minute window, you're going to be fine. You're not allowed to trade it 2 minutes before or 2 minutes after, and that's the opening. Opening the trade is what we're referring to.
Yeah, and I think it's a really good addition here, because what happens is if you trade within the news window and you lose money, but you don't lose the account. But if you make money, obviously you lose. So you can only really lose some money within that time window, but you will not lose the account. It's just a soft breach. In the past, you would have news trading, and then you would lose the account, which created a lot of problems. So now this is a really, really good solution, because you'll still keep the account, but you'll be punished, for not going with the rules, but you will not be punished in a way where you lose your whole account. So it's important to remember that
the whole idea is to decentivize taking risk around the high impact news because of slippage and so on, and the high volatility. And this way, there is no need or no reason why would you be opening a trade right before news, because
exactly.
if you win, you will not win anything anyways, and if you lose, you will take the loss. So it automatically it gives us or the traders the right kind of mindset how you should handle risk, right? If it's too much risk, you shouldn't want to do it. And in this case, there is no profit to be gained by opening a trade within that time period. So automatically, you will not find it attractive anymore to open it.
Yeah. Let's see if we have any more questions. Let's talk about the giveaways a little bit, because I know that a lot of people are asking about the giveaways. So we've transitioned from doing, so in the past we did, and I'm going to be honest with you guys, I'm going to be completely transparent here with you guys. Like in the past, we did giveaways every day. We gave away accounts every day. So we had a lot of people coming in here only for the giveaways, which is that's not weird. Nothing, it's obvious. We're going to have people in here coming in for only the giveaways. Now that we're not doing the giveaways anymore, you look at the comments, look at the chat. This is high quality stuff right here. The questions and the engagement from the audience, from you guys, the viewers, are top notch, which I really, really appreciate. So we're getting rid of the people that are only here for the giveaways, and we're keeping the people that are here for knowledge, that are here for information. And you guys who's actually in here, we see you guys, we see your comments, you're contributing to the live stream. And when we do start to do giveaways again, we're going to be doing it in slightly different ways. And we are looking at ways to actually rewarding people like you that are watching right now, because we want to make sure that if we do give away accounts, we give away accounts to people that are going to take care of that account, and it's actually creating good value here in the live stream. We want to take care of the community and want to give away to people that really deserve it. So we're doing things a little bit differently. We're also looking at, like I'm personally looking at into ways of giving away like specialized merchandise, like the hoodie that I have on here. Give away things like that, maybe your unique live stream hoodies that you can only win if you do certain things here in the live stream, and those sort of fun things. We're going to be doing it a little bit different, which I'm very, very excited about. Okay. More questions. Let's see. Having a mechanical trading approach has really helped me manage my expectations. I'm much more relaxed when trading. My 3 pillars are preparation, showing up every day. This is great. I mean, and this is also why, like, I wouldn't say that I have a completely mechanical approach, but it feels like I do, even though I can't show you like specific, with indicators and like specific signals. I know when I look at a chart, when I look at price action, there are very specific, unique ways that gives me entry triggers. So in a way, I'm trading mechanically because I need certain things before I enter a trade. And that really, really helps me as well. And like I said here on number 1, preparation. Every weekend, at least 1 hour, going through all the Forex pairs and drawing up the setups that I want to be taking. And then number 2, showing up every day. That's very, very important. Make sure that you put in the work, because trading is probably one of the most difficult things that you'll try to master. So you need to make sure they put in the work. And like I talked about earlier as well, never compare yourself to anyone. Okay. I think preparing yourself to people on social media, first of all, 90% of the traders on social media is not much to, compare yourself to, driving around in Lambos that's rented, and showing off their empty 5 accounts on their own exchanges and things like that. I mean, you do you, and you focus on your own process, and you're not supposed to be caring about anyone else. Just focus on your process and focus on the process, process, and the profits will come. A question: if you're a swing trader and your TP hits on the news, is it valid? It's valid, 100% valid. If you are, however, a swing trader that entered on a news event, then that's not valid. But if you are a swing trader that entered a day before or 2 days, then it does not matter. Then your TP gets hit and you're all good. And you know what? A purely mechanical system. I want to show you something. Okay, so I have this indicator. I'm not trading with it now, but you can trade completely mechanical as well by finding a combination of indicators that gives you specific signals. And one system that I've developed does exactly that. So we can look at, let's say, Euro NCD. Okay. So let's put on the indicator here. Go to the 4-hour. What you're going to see now is you're going to see a lot of lines come up here with EMAs and everything. And then you have the stochastics RSI. So the idea here is you got the 20 and the 50 EMA right here. And the system is based on this. Now, this is a profitable system. The reason why I'm not trading this way now is because giving me very few signals as a swing trader. Very few signals. It gives quite a lot of good signals on the lower time frames, but on the higher time frames, it's just not. It's not working for me. But what we want to see is we want to see price coming into the reload zone and hitting a support area. So I would say that this is support area right here, and you can see that price comes into the reload zone right here, and it also needs to hit either the 20 EMA or the area between the 20 and the 50 EMA, and then you have that reaction inside the reload zone, that bullish candle. You put orders on the retest of the 0.618 only if it's a bullish candle with a stochastics RSI bull cross. So right here you have a stochastics RSI bull cross right there. And then you TP at the first trouble area. Enter on the retest of the 0.618, stop loss below the reload zone, and then enter the FTA, which is the last local high. And yeah, and the idea is purely mechanical is if I pull on this instead. Look at that, okay? See what happens when I pull that off. This is the first one, right? And you see it comes up right here, a long signal. That's the long signal right there. So that setup that I just showed you would have signal as a long signal using the indicator. And what I can do is I can click this one and I can click add alert. And here I put in a strong long alert, and then I can do once per bar close. And then you'll see that it pops up here with the entry price and different TP strategies, and then I can take this, forward this message using a webhook URL into an EA in MetaTrader, or Discord channel, Telegram channel, or whatever, or a trading bot, and it could trade for me. And the problem with this is that not all signals are good signals. And that's the problem with having a purely mechanical system. I think the best way of having a purely mechanical system is to have some human intervention, right? You want to make sure that you're filtering out the bad signals. So look at this signal right here, for example. That's a bad signal right there. And it's very easy for us to see that this is a bad signal. That's also a bad signal. Okay, and it's very easy for us to see that that's a bad signal because this is in a range and it's supposed to be a trend following system. This one, however, that's a really good signal because we can add the fib, and we'll see that it hits the fib level right here and prints a bearish engulfing candle. That green bullish candle only prints after close of the candle. Yeah, well, that's the point, because it's after the print of the candle that you put in the orders. So you get the signal, and then you put in the orders. So if you have a system that gives you signals based on indicators, it's not really that difficult to code an indicator like this. But to make it completely mechanical, I think the best approach is to have a mix between mechanical and a human intervention. So I'm backtesting some bots that GPT coded for me, and I guess profitable. The most profitable 0.5 negative risk to reward has some really crazy results. Yeah, that's the thing. If you're only asking the market for a small move, then the win rate can be very, very high. The problem with this and the problem with these bots, and trust me, I'm using ChatGPT to try this out as well. The problem with these trading bots is that um, you need to test it in live environment to make sure that you're taking into consideration the spread and the commissions, because a lot of times, especially when you're on the lower time frames, the moves there's going to be a lot of trades, and the move's going to be so slow that, or so small that it's not going to be worth it from a commission point of view. So you need to actually trade it and test it in a demo environment with real environment, but in demo, if simulated environment. All right, Victor, you want to take a 10-minute break, and then we'll be back, and we can look at do our regular market updates.
Yes, let's do that.
Nice. All right, see you guys in about 10 minutes. right, welcome back, guys. Welcome back. I know that Victor did have something that he wanted to share. A question from Discord, I think, right?
Yes, we have a, of course, we have a section in Discord with where we have asked in the past in Discord, but also as well on YouTube to submit your. Let me see. Do I have my screen on? Yes, I will put my screen on now. Uh, yes, we have a section dedicated for your questions and setups, and this is one of them. We have from our esteemed user Ayrton M. If you see today's breakout of AU on D1, it looks like a false breakout. On H1, it looks like a break and retest. How do you guys trade this setup? I have copy both of them. This is the H1 screenshot that our viewers sent to us. You can't see any trend line here, but he's referring to a trend line which was visible on the D1, and the it's barely visible here. So I will open up the actual chart, and I have it as well. It's about this trend line, right? When it happened, it was visible on the daily, and Ayrton says, right, when the market was doing it, it looked like a break and retest. Of course, my trend line may not be the same, exactly the same place, since the it's not very visible to know where exactly his trend line was. But the core of the question is, if you see a trend line on one time frame, on a bigger time frame, and on a lower time frame, let's say on the H1, it shows break and retest. How do you handle that? That's the basic question. What would you answer, Jonathan, when you have?
Yeah, so it's simple. What's your main time frame? You know, what time frame have you tested? You know, and for me, so first of all, if you're looking to trade a breakout, the higher the time frame is that that breakout is visible on, and also I usually talk about the difference between candle closing above and also candles opening and closing above. So a daily candle closing above a resistance does not mean that you have a confirmed breakout. That breakout can easily turn into a fake out. But if you have the next candle opening and closing above the level, then you have very good confirmation of that being a breakout. But then, of course, if you're a breakout trader waiting, a whole candle, especially a daily candle, means that the trade will be gone. But what you can do is you can combine this, right? So you can say, right, so you have a daily candle closing above the level. That's half of the confirmation, and then you look at the lower time frames, and you have a open and close above. So you have like a small confirmation on the daily that the daily candle has closed, and then you have a break and retest on the lower time frames, and that might be a good confirmation. But this is for my system, but you just need to test it. It's very simple, actually. Like this should be something that if you're trading the break and retest system, this is something that you already know because you've tested it and you have the statistics to prove that you don't need a daily close. You only need to have a 4-hour close above the level or something like that, right? I know that if I'm trading a daily level or a weekly level, then it needs to be a proper breakout on the daily and not only the 4-hour. If I see that the 4-hour is doing a break and retest, but there's not a daily candle close above, then that daily candle might just turn into a wick,
Yeah, I think you had a couple of great points there, Jonathan. One is indeed, I think, in my opinion, what needs to be asked first is what is the time frame of your setup, right? You need to be aware what is the time frame that you need to see certain things, right? That's your setup, certain market conditions, and if you see, for example, this trend line, we that our user showed us, it is actually a daily time frame, right? It's a trend line based on the daily time frame. So I would say if it's a structure that is based on a daily chart, you should treat it on the daily. So you should not be going to the 1 hour to conclude whether it's a fake out or whether the breakout is, is has been completed. So that's one thing. You need to be cognizant of the time frame that the structure is relevant to the structure, right? And the other thing you mentioned, which is great, is that you need to build confirmations based on the data. So you need to explore what would have confirmed you. Let's say in this case, this turned out to be an actual breakout. Where would I be? And that's the question that I would ask. What indication would I have if I use either the H1 is very sensitive. So I would like to do something in between, like the H4, as you mentioned. Should I be waiting perhaps for the H4 to close on the other side of the, as a breakout, right? That could be one idea, or maybe as in this case is the case. Well, I trade with order blocks, of course. We have a formation of a bullish structure after it closed on the other side, after it broke that trend line. That's two things already telling you that this is not likely to go south, right? Because there is, they not only the price market participants were able to close as a breakout on the H4, but they also defended that breakout by forming a bullish engulfing, right? An order block in my case. So you have to ask. That's of course something personal, and Jonathan will have other tools he will be using to confirm. But you can see that you need to explore what indication, and for this you need to be creative and ask yourself different questions. And many of will not help you at all, but one of them may be able to help you, and that is by asking you, okay, what is it that I could be waiting for as for confirmation? And it can be one, it can be two things, or it can be even three things. If I see those three things or those two things, I can have a high level of certainty that my trade is probably going to go my way. Not for certain, of course, because it's in trading, there's never 100% certainty, right? It's a game of probabilities. But that's one thing that I would say. So one thing is, be cognizant of the time frame of the relevant structure. Whatever phenomenon, trend line structure you're seeing, it has a time frame, and it's only on that time frame that you should have the definitive breakout, right? So if it's a daily trend line, it's on the daily that you need to be having that definitive conclusion whether it broke out or not. And if you're trying to get in by using lower time frame, you need to build in some confirmation which are backed on data that you collected, which showed you that this has a good predictive value. By that I mean it predicts pretty well, most cases than not, that the breakout has happened and its price is going to continue much higher, right? So those are the two a few points that we can offer. I would like to thank that user for that question, because questions like these will help others as well. So it's an invitation for everyone else as I mentioned, in Discord, we do have a section special for those submissions, and I invite you all to submit your questions and your setups that you guys want us to discuss on the YouTube show as we just did.
So I am actually looking for people that are, probably, trading psychologists or trading coaches to invite into the, into the live stream. So if you guys have any suggestions, type them in the comments. If you have, if there's anyone that you feel you want to see on the live stream here that you want us to interview, type them in the comments here, and we'll can reach out to them if they're high quality. But I'm looking around, and I do have a few people in mind that I would like to invite to have a proper, you know, trading psychology session with. So we have a question here. My analysis is accurate about 70% of the time, but my challenge is managing the trades poorly. How can I improve this? So first of all, that's not, you know, that's not just your problem. That's most traders' problem, you know, because it's entry trigger is easy. Okay, it's quite easy to see that, oh, price gets rejected at resistance. Not really any rocket science behind that. You have resistance, you have support, price is bouncing at support, it's, you know, getting rejected at resistance. So actually, you know, finding a point of interest for entry, not very difficult. What's more difficult is managing the trades when you're actually in, you know, in the position after entering. And the way I do this is to rely on data, rely on testing as well. I try to have specific take profit strategies and trade management strategies. So one thing would be to always exit at the closer. So if I go long at support, I'm going to exit at the very first area where I think price will run into resistance. That's also called the FTA, or the first trouble area. And that's something that I create a plan around that before entering. So if I do see that a trade is about to form, the first thing I do is I look for a stop loss placement. That's the very first thing I do. Before even looking at entries, I ask myself, if I enter this move, where is it invalidated? I put my stop loss at that level, and then I look at where should I TP. If the risk to reward is too low, there's not even going to be an entry. If the risk to reward is good, I'm going to enter the trade. So now I have my TP and my stop loss. That's part of the plan. The second thing to do is to make a plan about trade management. You can have, for example, your profit might be at the second FTA. Okay, well, I guess that's not the FTA, it's the second one, but the second problem area, or the second trouble area. And then at the FTA, or the first trouble area, that's where you move your stops to entry. Okay, so you got to have all of that. You got to have a plan for that. And if you don't have a plan, then you start making decisions while in the trade. Some people will say, set and forget is my plan. Entry, TP, stop loss, everything's in. Now all I have to do is just leave it and wait for the alert to go off if my TP or stop loss gets hit. If you feel like you're having problems with, you know, managing your trades, and you can't help yourself to manage the trade, you're making impulsive decisions that you probably shouldn't do, then I would recommend that you try to look at a more set and forget approach. Maybe use a lower TP, where the chances of price hitting that TP is higher. So you'll get used to maybe having a bit higher win rate, maybe increase that confidence, because you need to have very high confidence in your system to be able to not, you know, make those small, like exiting too early and things like that. And then also read that book, Trading in the Zone. Honestly, I think it's gonna help you a lot to understand the importance of being patient and having you know, confidence in your system. Very, very important. Yeah, and this is a good point. If you have 70%, then I don't know what you're doing managing that trade. Like, if I'm gonna be honest with you, if you have 70% win rate and you're managing the trade, and that's the reason for pulling that down, I mean, what type of win rate would you be comfortable with? Like 99? You know, that's 70% is very high. is you should be able to have a high confidence in a system like that.
Yes, yes, indeed. 70 can be very profitable if you have a positive risk reward ratio. 70% is good.
Let's. I'm gonna go through. I'm just gonna go through the markets here, see if I can find anything, anything interesting that we have. So my two trades today has, or this week has been the ones I've already shown, NCD CAD and AD CAD. So now I'm looking at new positions to enter. I did have one ID here, and it looks like it turned out. Actually, it didn't hit that TP. I'm afraid TP was right there, but this was the general idea right here, and I didn't take this trade, but the idea was based on the fact that you sort of have a gap between this level and that level. The reason why I didn't take this trade is because I looked at this in an uptrend, and I don't really want to be shorting an uptrend. But if you look at the lower time frames here, actually, you know what? This is not even a good trade. No reason for me to show that. It's just a bad trade. But on USD CAD, what am I looking at here really? Yeah, so on USD CAD, I'm actually looking for a move down here, and I want to go long in this area. I think that's a decent support area. What's happening on a daily? Yeah, so on the daily, it's a daily breakout right here. It's just a level here. So I'm looking for price to come down into this area and then start forming bullet structure and kind of start moving upwards. Usually what I want to see is sort of like a rounded bottom here with price action forming something that maybe looks something like this or something like this. Doesn't look very likely. It's not really a, you know, I'm just gonna put alerts here and that's it. And then on GBP NCD, I guess the plan here is not really, I mean, my plan is still, I want to see price come down here, and that's where I want to go long. I got my alert down here. I'm just waiting for that level to get hit. Not sure if that's going to happen. And then on CAD JPY, it's still inside the reload zone. We can still see a, you know, a strong reaction inside this area. So we might see a, you know, bullish, maybe 1 4-hour candle, maybe some type of structure like this, and then a bullish engulfing candle like that, seeing around the structure. So I'm still looking for longs here. I still think it's a very strong uptrend. We do have news. What was that today? Now that's, yeah, balance of trade. We have tomorrow, then inflation rate. So that's, yeah, I'm not going to be trading this because of the inflation rate and balance of trade for the Japanese yen. It's just too much risk on both Thursday and Friday. So this is actually not going to be a trade. I'm moving this down to a list that's not in priority. So even though technically this looks like a good trade, the news event is just adding too much risk, and I want to make sure that the trades that I do take is of the highest possible quality, and there's nothing in the way of my technical analysis. So on Euro NCD, I want to see move down to that level. Looking at the daily, this is I'm looking at a range here. And I want to say break and retest of the range EQ. On the 4-hour, what I don't really like about this is the fact that we do already have a higher low here. And usually what I want to do is obviously If price moves down here now, then this kind of becomes resistance. So yeah, I'm not really sure about this one, and because of the fact that I'm not sure about this one, might be a reason to move this to the list below as well. But definitely on the daily, this still looks interesting. So I'm going to be adding an alert. And I'll move on to Ethereum. On Ethereum, I had a short setup, and that one did not play out. And now I'm not really sure what I want to be trading here, so I'm moving that down as well. And then we have GBP CHF, which is coming down for a retest of this whole area right here, and that's the level where I want to be buying. So I'm putting an alert. Well, I do actually have an alert right here, and when that level gets hit, I'll be looking to take a trade here. Now the reload zone is quite high, but in this case, I think this is the level I want to be trading at. So I got my alert, and then on GBP USD, very obvious level here on the 4-hour. That level right there. I'll be adding an alert right here for a move down here and a bounce. We can add the reload zone here as well, and you'll see that the reload zone comes in a little bit lower. So you might see a wick down here, but I'd like to see a good bullish reaction for me to go long here. Now looking at the daily, we might actually move down here. So yeah, I don't know. I think not really sure about this one, because on the daily, it's a strong move to the upside, and we might even have that retest. And it would make sense as a break and retest on the daily. But then on the 4-hour, it's going to be that one. I don't know. I'll put in an alert, and then I'll wait for good confirmation. And that's pretty much it. I'm trying to be very selective this week, and it's working out well. I mean, I can't really brag about 100% win rate because I've just taken 2 trades, but it's better than losing money, So I feel like,
For sure.
yeah, I mean, for me, it's taking it very easy and taking as fewer setups is always more profitable for me. So I do start to feel like I want to be trading more. I want to be taking more trades, but that always ends badly. So I need to stay disciplined here.
Yeah, there's a natural occurrence or a natural tendency that if you're going to take just 1 or 2, you automatically tend to be selective. And the opposite is also true. If you allow yourself, or your trade plan allows yourself to be taking 20 trades a day, automatically you will tend to be less selective with the entries. So, and we need to be selective, I think, and my data tells me that as well. If I start being less selective, my expectancy, in other words, the amount of R, the average R I get per trade, or if you can measure that in pips as well, it lowers. It is lower. So why do I want to lower my expectancy by being less selective? So I know from the data, from experience, that being more selective typically makes me getting more better trades automatically, right? I tend to be more selective, and I pick the best ones to take because I only have 1 or 2 chance if I were to be in that position. I don't have that rule, but I have it in other aspects of my trading plan where being more selective is better for my bottom line.
I'm currently also doing a new challenge, a 250k boot camp challenge. Now only taken 3 trades on that one, so I missed in slightly is small profit on that one. But I'll keep probably next week I'll. Excuse me. Next week I'll start sharing the process of I'll be showing the dashboard and everything, the 5ers dashboard for that evaluation account, and I'll be trading that that evaluation publicly, kind of show you guys, show the process, show the trades that I'm taking, and I'll show you guys how, how long does it actually take, trading a system like this. How long does it actually take to, clear an evaluation account? Because a lot of people, they say like, well, with 2 trades per week, how can you make money? How can you actually pass an evaluation account? Well, if you're winning 70% and you're making, 1 or 2 R a week, and you're risking 1%, well, it's not going to take many weeks actually to pass an evaluation, and so it can actually be quite profitable. But we'll see. I think it's going to be an interesting
There is
interesting journey.
Yeah, I do use the Dixie or the dollar index, but I don't use it. It's not part of my trade plan, so I don't need to use it to have a signal. But when I want to see, for example, when I have conflicting biases on GU and EU, I would like to see if it's a dollar move or not. And looking at a Dixie will be able to give me that indication. What is moving? Is it the pound moving? Is it the euro moving? Or is a dollar move? Because if it's a dollar move, both of them should be moving, right? Since it's a dollar index. Another thing you have to consider is that the composition of the basket of currencies is highly towards the euro. So you need to know those things. But I do use it to give me a little bit of clarity if I want to have like a second opinion on what is most likely to happen with my trades EU GU on the side of the dollar, right? The other side, of course, dollar index will not be able to help you. And with other side, I mean, for example, today we had a move on GU, which was based on the news, and the dollar index didn't have that move until a little bit later. So that can help you see what is moving, but it's not part of my trade plan, so I don't use it every day. But it can be helpful. It can confirm your trades if you're in a dollar currency.
Yeah, it's also important to mention, here how long you've been hitting 70% per week, and is it consistent? It's very important to mention that I started with this new approach last month, so it's only about 2 months, which is nothing when swing trading. So but I've tested it so much, and I'm so very confident in it. And so last month 60%, this month around 70%. So I feel like I'm actually quite confident in it because of the testing. But still, it's not until I'm at like 6 months that I can start, being really confident in it. So take it with a grain of salt when I talk about that 70% win rate. I'm looking at AD NCD right here, and with that said, before switching to this system, I had a win rate of around 50. So from 50 to 70, going from looking for trades that have 2R or 3R to yes, exactly. That's the break and retest. But the thing that pushed my win rate up was lowering the profits, having a negative risk to reward. Okay, so it's not very much more profitable. Okay, it just has a higher win rate but lower risk to reward. But I function much better with a higher risk to reward. So actually, the lower win rate system might actually have been more profitable. Actually, I think it was a bit more profitable, but because of the fact that it had a lower win rate, I made a lot of mental errors. I made a lot of mistakes and a lot of impulsive decisions because of the way that system functioned when I didn't take profit early. Now with this system, I can be completely confident in the edge because usually my half an hour TP gets hit within the first hour of entering the trade, and if that doesn't happen, I can actually exit the trade and be. So I'm much more confident, which means I'm not making any mental errors anymore with this system. So a higher win rate doesn't necessarily mean more money, but it means it can be more money because you're making less mistakes, because you're more confident, because you have a higher win rate. So there's a lot of things that, I mean, it's not just about win rate and average risk reward. It's about how is your system affecting you emotionally, and it's
It's
trading is
it increases your compliance as a trader to your trade plan, right? And that's
yes.
something you need to look for. What trade system, what time frame, how many trades per day, how much risking per trade, and what kind of how long the trade duration is. All of those things can affect your compliance. Are you going to comply with the trade? Are you gonna, trading executed perfectly? Are you following? Are you going to be following all the rules? If you're not, it doesn't make sense. Even if the strategy or the trade plan is very very profitable, but if you can't stick to the plan, it's useless to you. So what you
Yeah.
have found is that this way, having a negative risk reward, you can be more compliant to the trade plan, and that is very valuable.
So I want to cover AUD NCD here. Now I do have an idea for AUD NCD that I want to. I want to take this. I want to go long down here. So this is on the daily, right? And um, yeah, I don't think I have to mark this out. It's just it's a level down here. I want to go long somewhere down here if there's a reaction. But what I see here is actually what might be a setup, but I'm not going to take it. And the reason I'm not going to take it is if you go to the daily, if you look at this and you say, is this bullish or bearish? Well, there's a bullish breakout happening right now. It looks like a possible fake out, but still it's a bullish breakout. It's not a breakout to the downside. It's not a bearish breakout. So this to me is bullish. You could say that, well, it's at resistance. Well, yes, it's at resistance, but prices have been moving higher for the last few weeks, which to me means this is bullish. So I don't want to short this. I'm not going to short this, but and this is also one of the things that I would do in the past is like, oh, you know what? Look at this. This is a trade. I'm just going to enter this. So I'll enter here. But it does look like a good trade. Then I would front run that low right there. And this could be the trade like 1.25. The reason why this looks somewhat interesting is because you have a confirmed breakout on the 4-hour. So first you have, this level being used as support. You get a bounce, and then price moves down, closes a 4-hour candle, not only below these lows, but also that one right there. And then you go to the 1-hour and you see a bearish structure and a big wick on that candle right there. So it kind of looks like it's in the process of breaking down. But again, I would never short a strong move like this one unless this daily candle would close like right now. That would be a good indication of a bearish candle at resistance. But then again, I think if this would be a downtrend and you see this structure, or you would have this structure in an uptrend, so it looks like this, and this would be a high time frame uptrend, and this is on the lower time frames, then this just looks like the perfect opportunity for a break and retest. So if this would be in a downtrend, then definitely would short this. Okay, so we have more questions. I just started watching. Where can I find your break and retest strategy, please? I think I need to do a presentation on this. I need to prepare something like a proper webinar type of presentation. So I'll do that, and you'll keep your eyes open for perhaps next week. Enter the sell on EU. Let's look at that. EU.
Yeah, maybe I
Hour.
can show that. I
Yeah.
have it already. Since it's an H4 supply. I'm not sure how this user is, or this viewer is, defining its H4 supply zone. But if I see this on the higher time frames, I we have one big area of supply. We have just cleared out. We are currently above a weekly supply area, and we have now entered another weekly area. This apparently is price did not transition into out of bullish order flow. So that is one thing, and I don't know if this if trading Zlot is using the same way of defining supply. But in my case, if I say H for supply, it is an order block that it is reacting to, and in this case, it's a beautiful reaction to a H4 order block. If we go to the lower time frames, we can see how precise it reacts to that structure. Right, this is something way from many. This is from March, 13th of March. So it's amazing how it reacts, how precise it reacts. I don't use them for entries, but I do have them on my chart for references. If I don't have anything recent, then something from the very relative from the very far in the past can help you find where price might gravitate to and maybe react from. But what I want to say is though, you took a short there, and that's a great place to be taking a short for a number of reasons. One is we are the yellow line that I have here, that horizontal short line there. That's the 100% D1 ATR. So we are already a little bit stretched. That does not mean that price necessarily needs to reverse from here, because if you look how it came there, very impulsive, and it hasn't shown us anything bearish yet. It is showing a H4 order block, but that's we still have 3 hours and 11 minutes, so it's basically we don't know how it's going to close yet. So we don't have anything on the H4, and the H2 is still printing bullish structure. So we haven't switched yet on the H2, H4. The only thing we do have is an H1, right? I'm going to take this one. There is a reaction which is visible as a bearish structure on the H1, and price is having difficulty closing above it. So that could be a good sign. It's a little bit early though, I would say. So if you entered here, I don't know about your stop losses and take profit, but I wouldn't be confident yet until on the higher time frame it starts showing those bearish structures as well. In my opinion, this still has a possibility of going higher, because if you look at how, let's say on the 5-minute, we are above the 100% D1 ATR, but price is telling us that it's holding up quite nicely. Look at this high after that impulsive move up, right? We have higher highs, higher lows all the time. As it is, of course, hitting this structure, I'm going to take away the H2 just for make it more clear. Each time I do see that it is getting back into that supply area on the H1, right? But it's every time it's making a higher low, hitting it back, higher low, and each time it's getting a higher high as well. And this wick does look like it's a rejection, but it needs to have follow through. If it doesn't have that follow through, and right now it's still making higher highs ever so slightly, that's a narrative of a continuation, right? It's getting force, defending a higher place. The buyers are coming in to defend a higher, making higher lows each time as it is getting ready to continue its move. Of course, it is already at 100, but it does not mean it cannot go another 20-30% its ATR. It does happen. It happened with some frequency. So I wouldn't, it's a great trade. I see that, but I would be careful with holding it too long.
Yeah, it's so we get a question here. Dollar cost average or adding. I think the better way of describing it would basically be to adding to losers, adding to a position that goes into drawdown. What's your view on that? And he also mentions, when we should get Saul on here when we let me remember that. I'll see if I can get Saul on maybe for next week. I know he's very busy with the hub migration, but that would be awesome. But what's your view on this? I mean, you might go into drawdown and you might, double your position. So when it goes up to entry, you'll be able to, actually kind of maybe make some money on that trade. It will be able to close it at break even.
Well, I think, do we have enough time for that? We we have about 7 minutes for the session. I think that question that can be a whole theme of a session. What I can say is the following: if you need, everything needs to be based on data. So first of all, you need to test whatever thought you have. If you think buying it because it's now even cheaper than what you got, you should, before actually executing that idea, you should test it and see in back testing if it does what you think it will do. Because usually it's counterintuitive, but that's how sometimes trading is. The fact that it looks cheaper and a bargain doesn't mean it's a good opportunity necessarily. But going more concrete on the question, whether I do the dollar cost averaging, I don't do it in my main strategy, and the reason is that I have an entry, a confirmation, and if I think that I need to be entering at a lower point, then my question would be, why don't I wait for it to reach that lower point and then put my first position, right? Why would I need to get in before the best place? So my entry already makes me enter at the optimal, at least based on the data that I have, at the optimal level. And the other thing is, I have a stop loss, and the stop loss is, in my case, is quite tight. So if it gets hit, to me, that's a sign that the structure that I thought would make price react didn't do its job. And if that is the case, then I have no business trying it again. It already told me it will not go in my way. So why lose a second time, right? So that's how I trade. And I don't do dollar cost averaging. I just go in one trade per signal. I can have multiple signals, but each one of them will be just one signal. I enter, put my stop, and I leave it, not adding anything to it. If I add to a setup, it's because I have multiple signals. However, there can be something said about if you think in terms of not a single level where you want to be entering, but an area, it makes sense if it goes well with your mentality or your mindset and your compliance to your trade plan, right, to ease into it, right? So you buy, perhaps you put in quarter of the risk, and if it gets at a better price, right, not because you have not because it invalidated the setup, but because you don't know, it's an area, you don't know exactly how when it will react, right? If that is the case, then I can understand that you distribute the risk not in just one entry, but maybe in 2, 3, or even 4 entries, all of them within a bigger setup that hasn't been invalidated yet. But once a setup is invalidated, and you should know this before you enter, where does my setup become invalid, right? Once it does invalidate your setup, you have no business adding anything to that. So it has a place to be used where you can add you have more positions to a trade that is in drawdown, but it is not to it is for distributing your risk, not going in because that may be something that goes better with your mindset, with your mind, with your way of trading, with your compliance to your strategy, with your emotions, right? So you're making the strategy, you're adjusting or modifying it to fit your style better. But if you have a precise entry signal, you should not be doing, in my opinion, adding to your position, because you already have your signal and that's it. Your signal should be the moment you enter, and if it's not, then why enter at a later time or at a later
Exactly.
level?
I think that's a really good point right there. If you have an entry signal, that's when you're supposed to be entering. And if you're going to be averaging down, like if it's going to be dollar cost averaging or averaging into that trade, then why didn't you just enter earlier? You know what I mean? Like I feel like for me, dollar cost averaging or averaging into a position is not good. Not going to be. I've always lost money doing that. So
Yeah,
yeah, dollar cost
and
average though, like the dollar cost average, that's how I invest into my index funds. So every
yes,
month, every like the first of every month, I buy a certain amount of a basket of index funds. By the way, I'm up 20% on that this year. It's amazing. That's pretty good actually. And
me too.
I'm not like that's just sometimes I'm like, huh, you know, investing long term is actually quite profitable. You know, being up 20% this year on that amount of money is actually quite good. So that's the way I'm investing into crypto and index funds. Is I'm just buying a certain set of on Bitcoin. I also buy when there's dips. So on Bitcoin, I buy every month, and also when there's a massive move to the downside, I buy at that point as well. So when it comes to investment, that's what this user is saying right here. Dollar cost average is more fit for investors, I believe, because it may take months or years before you can gain from it. And well, yeah, I think that's what I would say. You know, with dollar cost averaging, if you're looking at an investment, you dollar cost average, because if you're looking at an investment and you want to hold that for the next 10 years, buying today might be you might have a much better opportunity to buy in 3 months, right? But you never know. So just add to that position, you know. And this is also
Yeah,
not a
in
bad
trading,
idea, you know, buying shares regularly in companies that give dividends. And if you believe in that company, if it's something that you want to be, you know, buying for the rest 10, you know, the next 10 years, you just buy every week or every month. It's a really good strategy, actually.
yeah, the thing is, the retail investor is not good at all at timing the market, and with dollar cost averaging takes that part out of it, because you're not timing any one specific time when you enter your whole. Let's say you have a sum to invest. The moment you enter, that's your entry price, right? That's fixed already. And if you want to, you leave a lot of your profits will depend, right, when what level you got in. But if you dollar cost average into that position, you're getting an average, and you're less likely to be buying at a high place, because if price went lower, you will still be buying in and having an average price, which is for investor a really good way to be buying into the market. But as a trader, it has a much less narrower applicability, because I don't think it's in most strategies, I don't think it's such a great idea. There may be strategies where you, if you do that, especially if you have a very a stop loss that is very far away, and you're doing it with low risk, there are certain places where you can, certain strategies where you can do like add to your losers and still come up winning. But for most people, I think it will just trick you into revenge trading and all those bad habits. So I wouldn't give that as an advice easily.
All right, guys, it's time to end the live stream here, and the last live stream of the week here. I would like to thank you all for joining this week. It's been a really good week. Lots of good knowledge that we shared here. Next week I want to do. I'm gonna put together a webinar showing you guys the break and retest system that I'm using. A proper webinar with setup examples and breaking down everything. It's a very simple way of trading, and it's profitable. And honestly, guys, you want to keep it simple, and this is a really simple system. So I do recommend that you tune in for that one. Victor, thank you for this week, and I'll see you and everyone else next Monday.
Thank you, guys. Bye-bye.
Take care. Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we